Welcome back to Alpha Recap, your nightly market wrap from stockalpha.ai. Great to have you with us. As always, if you have questions, you can reach us at stockalpha.ai. Today we're breaking down a mixed session where tech led the way but smaller names lagged. Joining me is Aiden. Thanks for coming on.
Thanks for having me. Excited to dig into what closed out today's tape.
So, quick headline to set the scene. The market closed with a clear cross-current. The S&P 500 finished up about 0.2%. The Nasdaq 100 outpaced the field, finishing up just under 1%, while the Russell 2000 closed down about 0.5%.
Right. Selective buying in big cap growth and some commodity-linked areas, but broad participation was missing.
So, what really stands out here is the concentration in tech. Why did the Nasdaq 100 outpace, Aiden?
A few things. 1. Liquidity and index composition. Big, liquid tech names attracted flows. 2. The AI and cloud narratives kept momentum in the space. And 3. M&A chatter in software helped support those stocks.
Yeah, and I mean, when you step back and look at this, rate uncertainty also played a role, right?
Absolutely. There was a lot of debate about the Fed's next move, and that ambiguity tended to favor growth names that can compound earnings over time, at least in the eyes of traders today.
Hold on, say that again. How does rate uncertainty make growth stocks more attractive?
Sure, when market participants expect interest rates could stay higher for longer, they price in slower economic growth. Growth names that can show strong future earnings become relatively more valuable because investors are betting on that long-term payoff despite a tighter short-term rate environment.
Got it. Right. And the other thing is sector differentiation. Let's hit the sectors quickly. Technology and communications led, thanks to AI and cloud. Materials and mining also had a good day. Industrials had pockets of strength.
Yeah, deal activity in materials and mining was a big part of that. Investors positioned for ongoing industrial demand and commodity resilience. So miners and materials names saw flows.
Real estate had some action too, if I recall correctly.
Correct. Real estate deal activity picked up, and higher quality REITs with clear cash flows, commercial and logistics, drew interest even though rates are still a headwind for the sector overall.
Not what anyone expected. Let's talk about energy and financials briefly. Energy was mixed and range-bound, right?
Yes, some exploration and production names and a few thermal coal names had interest tied to commodity moves or company-specific catalysts, but broader energy indexes didn't move much.
And financials struggled, correct?
They did. Financials underperformed, pressured by lingering doubts about Fed communication and some firm-specific governance or insider-related headlines. That made bank and finance names more sensitive and less compelling to traders today.
So we saw a market that was up overall in big caps, down in small caps, and pretty mixed underneath. How does breadth fit into this picture?
Breadth was narrow. Gains were concentrated in a cluster of large-cap tech and a few cyclicals. Historically, that kind of narrow leadership can persist, but it also raises the risk of a sudden pullback if those winners lose momentum or if a macro surprise hits.
Yeah, breadth issues can sneak up on you. Short reaction? Wow, interesting.
Right, and the Russell 2000 weakness highlights that smaller cap leadership hasn't come back, which matters for a sustainable rally.
Let's drill into a few individual movers. You had Peabody Energy in the headlines?
Peabody was in focus because of shareholder developments and commentary around coal demand fundamentals. That helped thermal coal names show strength in the materials patch.
Home Depot also got attention for a strategic shift toward professional customers. Analysts thought that could improve margins over time.
Exactly. A strategy that tilts toward pro customers can boost repeat business and gross margins. That's the thesis. And the market reacted to that messaging.
There were also headlines around GE Healthcare and a securities probe that weighed on healthcare names overall, right?
Yes, the ongoing investigation clouded sentiment in healthcare services and added to the sector's bifurcated performance. Even when one part of the sector has positive regulatory news, other legal or investigative items can offset that.
Speaking of regulatory news, there was that biotech item on sacituzumab tirumotecan, the drug acceptance for review overseas. That created some volatility.
It did. That kind of biotech regulatory action tends to generate episodic moves for related names and the broader oncology supply chain. It didn't open a healthcare-wide rally, but it did create pockets of interest.
Short reaction? Yeah, that tracks.
And on the cloud side, smaller private deals, like Cloud for Good buying Stack Nexus, kept M&A chatter alive, supporting some public cloud and software names.
Okay, pivoting to macro. There weren't any huge data prints today, but Fed commentary dominated the tape. Summarize the takeaways.
Market participants parsed Fed speakers for clues on timing of easing. The main takeaway was ambiguity. Analysts noted a split between scenarios where the Fed is patient and waits for clearer disinflation versus one where they pivot sooner if growth slows.
So basically, markets priced multiple scenarios, which kept duration-sensitive names cautious. Could you unpack duration sensitivity in plain language?
Sure, duration sensitivity describes how much a stock or asset's price reacts to changes in interest rates. Banks and certain financials are more sensitive because their earnings depend on lending spreads and funding costs, so rate ambiguity can hit them harder.
Right, and inflation prints, CPI, PCE, plus employment data next will be the next big test for that narrative.
Exactly. Hotter than expected inflation or payrolls could cool expectations for easing, hurting rate-sensitive and small-cap names. Cooler prints might help broaden the rally into cyclicals.
Short reaction.
Also worth noting, banking scrutiny and governance headlines can keep credit spreads and regional names volatile even without a macro shock.
Let's close with a technical and scenario framework. Technically, we saw concentrated returns in big tech again. That pattern has been around since mid-2026. How long could that narrow leadership last?
It can persist for weeks or months, analysts said, but it's fragile. If the winners slow down or macro surprises hit, breadth-driven pullbacks can happen fast. On the flip side, if cyclicals get steady positive data or more deal activity, breadth can improve.
Give us the base, bull, and bear scenarios in plain terms.
Base case. The market grinds higher with narrow leadership. NASDAQ 100 outpaces S&P 500 modestly, and Russell 2000 underperforms until Fed clarity improves. Bull case. Clearer disinflation or a dovish Fed shift broadens the rally into cyclicals and small caps. Bear case. A hawkish surprise or a run of negative sector headlines triggers a sharp repricing of rate-sensitive assets and further pressure on small caps and financials.
Good framework. Quick reminder, this is informational analysis, not investment advice. Analysts note trends and market signals, but conditions can change fast.
Important point. We're sharing what the data and flows suggested today, not telling anyone to buy, sell, or hold anything.
Final takeaways, Aiden. 3 crisp ones.
1. The session was characterized by selective buying into large cap tech and some commodity exposed names, while small caps lagged. 2. Fed ambiguity remained the dominant macro theme and kept duration sensitive names on edge. 3. Breadth was narrow. Momentum favored big cap growth, but that leadership is fragile without broader participation.
Perfect. If you want to follow up, remember, if you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. See you next time for another Alpha Recap.
Thanks, Aiden. And thanks to everyone tuning in. Good night and take care.